Thank you, Minister Keegan. I think it's always good to hear at these conferences what our own UK government is doing to support some of the initiatives and make an impact on the continent as well. So thank you for sharing those insights. So we're next up. We have another banking panel led by Cobus Visagi, who is hopefully around. I think I saw him at the back. If I could invite him up onto stage. Cobus co-founded Africa Merchant Capital in 2012, which is a privately owned boutique merchant bank focused on high-growth private capital markets of sub-Sahara Africa. So he's going to be leading a panel on microfinance macro returns, the reality of investing in Africa's microfinance sector, which is something that we heard the previous panel talking about. So very interested to hear this. Cobus is going to be chairing. He is a very qualified individual in terms of his experience across sub-Saharan Africa, and I'm afraid I'm particularly a bit of a fan because I'm also a rugby fan, and for those of you that didn't know, Cobus is an ex-Springbok representative, so a very talented rugby player as well. I think tight head, I think it was, is that right? Well, I was loose head, so in my days. Welcome up onto the stage, Cobus, and I'll leave you to introduce your team. Thank you.
Good afternoon. Thank you. I think our panelists are going to introduce themselves. We're going to do a bit different, so I'm asking them to join me. I think we are still one panelist missing, maybe, but let's see. I don't know who's sitting where. You're welcome to sit wherever you want. Hi, good afternoon. Okay, thank you. We've got quite a tough gig here, especially now that you've heard that I'm a former rugby prop forward. To have the session just before lunch is probably as difficult as it can be for me. But we're going to speak today to both representatives and investors involved in the microfinance institution industry in sub-Saharan Africa, and get a view of the perceived macro returns in the sector and what is the real state of the nation in the MFI industry. To introduce, I've just asked each one of them to introduce themselves. So Reginald, maybe starting with you, just quickly do a quick introduction.
Hi, my name is Reginald Masawe. I'm CEO for Microfinance Limited. It's a microfinance company in Tanzania.
Hello, my name is Robert Chiberiak. I work with Development International Desjardins, and I'll be representing the fund investor point of view.
Hello, I'm Milena Loaiza. I'm working in BIO, the Belgian DFI. Our focus is to support private sector in developing countries.
Hello, good afternoon, everyone. My name is Bonaventure Okaimo. I'm the Chief Operating Officer at the Development Bank of Nigeria. It's a development finance institution that is focused on providing access to finance for Nigerian MSMEs. Thank you.
Hello, good afternoon. My name is Frederick Inshakanabo. I'm the Chief Financial Officer for the CRDB Bank Group, operating in Tanzania. We have a subsidiary in Burundi, and we are expanding in Congo. We are a commercial bank, and we are based in Tanzania.
Hi, I'm Michael Kowalski, co-founder and managing partner of ID Inspiring Development. We're a Frankfurt-based specialized management consulting firm, but also now, since end of last year, investor in a microfinance institution, non-deposit taking in Kenya, Musoni Microfinance.
Thank you very much. Michael, maybe I'm going to start with you. You know, the perception in the market of the high or macro returns can be quite deceptive. And in many cases, you can say you know, is it in competition or complemented to the development impact goals and expectations within the industry as well? What would be your view on that?
Yeah, I believe that by now there's a general consensus that you have to have both. When you're in microfinance, you want to have development impact and financial return. The balance is the main question. For me, now if I put my investor hat on, I'm looking for the target client outreach and the transparency with which services are provided. I'm looking for loan portfolio quality, of course. Asset quality is quite crucial, especially after COVID, digesting restructured cases. I'm looking at operational efficiency. The last couple of years have seen tremendous developments there in improving efficiency, but all that in a decent control environment. HR factor, management capacity, staff development, and the incentive systems are quite important as well. Thanks. And last but not least, certainly, especially from an international investor, the bottom line counts. I think it's important to keep in mind that we also look at it from a hard currency perspective.
Thank you. Milena, maybe you also, you know, coming from an investor, financier point of view, just what would you say is the real measure of performance of investees in this market, you know, in the balance of performance versus impact?
Well, I think both are complementary. I think that for us as a DFI, it's important that our investees are financially sustainable, for sure. And on the other side, when we talk about development, I think this is a journey that when we decide to invest in a microfinance institution, in this case, we discuss together what our developmental goals are. So we make sure that the institution understands and is also willing to move toward a progressive growth. And I think this is the best way, at least from a DeFi perspective, to stimulate the returns.
Thank you. Just, Tony, just from the perspective of the Nigerian Development Bank and the way that you approach it, how important is your development criteria, and what is the specific parameters that you are pursuing as the development bank within the sector?
Thank you very much, Kobus. So the issue here is, in Nigeria, we have a lot of MSMEs, and I'm sure you are aware we have over 41.5 million of them. Another major challenge is over 98% of them are micro and small. And these are the same group of people that find it very difficult to get access to finance. Coupled with all of that, we have a situation where we have a lot of security challenges. We have people that are operating in the economically disadvantaged states. There's a major challenge, and that's why DBN has come in. Okay, so how do we ensure that these MSMEs get access to funding? And we've decided to work with participating financial institutions. It's not been easy, but first of all, you have to incentivize them. And we've come up with a whole lot of incentives that will assist both the commercial banks and the microfinance banks to do financing for MSMEs. We've provided them with technical assistance, and then even capacity building for the MSMEs themselves. And while we are doing all of this, COVID came in. It was as if it wasn't enough. But somehow, COVID helped. A lot of digitalization. Most of the MFBs that were able to digitalize their operations could do better. But unfortunately, out of over 911 MFBs in Nigeria, very few of them have that capacity to kind of turn around their operations and enter into the digital space. And that's part of what we've also done, to assist them to get into the digital economy, into the digital environment, done a lot of training, and that has assisted us to do a lot of getting access to these MSMEs. Thank you.
Thank you. I think we'll come back later to the digitalization. I think it's an important subject within the MFI space. Reginald, if I may ask from your perspective, in the from the Tanzanian perspective, you know, what is the proposed model in, it's clear from the Nigerian perspective that a lot of this, the financing is running through the banking industries. What is the model looking like in Tanzania, and how healthy is the state of the MFI industry in Tanzania?
Thank you. Tanzania is one of the African countries. Africa is not one country. And the model in Tanzania, actually, Tanzania is somehow now beginning to formalize the microfinance institution. And the last 2 years is when the Microfinance Act was passed by Parliament. So it's a great opportunity for investment in Tanzania in many ways, the formalization, but also the need, the growth in microfinance and SME sector is growing very fast. And the country is also adopting the market-based policies where we see now the democracy is growing. And for your information, Tanzania, we have a new president, which is a woman, not common in Africa. And we have a couple of development in the private sector that is really making SME very good investment opportunities in many ways. And most banks are looking into the cooperative financing governments. So the kind of SMEs are left unattended in a way. So you're welcome to Tanzania in that respect.
May I ask that you also comment, you know, what was the impact of COVID in Tanzania, and maybe out of interest, you know, with the change of the new president, have you seen kind of, you know, green shoots of businesses flourishing in the new environment?
The impact of COVID was really big. A lot of people died, but the business was slowed down. But I can say very confident that now we are post-COVID, and the businesses are beginning to go back to the growth that they had before. The Tanzanian economy has been growing at 10% almost. I think last year it was around 5%. Now they are projecting to 6%, and so on and so on. So we are post-COVID-19. The new president actually is coming up with very different policies from what we had before. We had some difficulties a bit for the previous period in terms of business environment. Now a lot of policies have changed in terms of tax collection, in terms of registration. The government is quite investment friendly.
Thank you. Lena, just coming back to you again from an investor perspective is, how much of your focus at the moment is on the future of MFIs? You know, how much of it is focused on the digitization and, you know, is that a requirement for you to invest? Yeah, maybe give us an indication of the future, your future view of it, and how you see the industry progressing, the type of countries, companies that you would like to support, and how you see that develop.
Yeah, perhaps I take the question in two parts. So the first one will be related to digitalization, like really being a tool to accelerate value creation from an investor perspective. So I think in that sense, we can all agree that COVID has been an accelerator for digitalization. We see really a big difference. We saw a big difference between MFIs that were ahead in terms of digitalization than others that were not when coping with the pandemic. I think a conclusion is that we have is that digitalization really play a role on creating resilience for the institution itself, but also for MFI clients, as those were able to continue accessing financial services. So that on one side, so okay, digitalization creates value, so it's important for us, definitely, as an investor. On the other side, perhaps what is less evident is the fact that digitalization transformation involves enormous resources and large upfront investments. This could be in different angles, like, for instance, leadership, change management, human capital, and capital itself. So I think most of MFIs, when they decide to digitalize, the main objective is, of course, to reduce costs and improve efficiency. And we believe this is definitely achievable through digitalization. But I think what is important for institutions like DFIs to understand that this is achievable, but not from day one. So investors need to be aware of this and be extremely patient, I think, when it comes to digitalization.
Thank you. Robert, I'm just going to move on. Having built a lending business myself over time, there's a very big difference between being an equity investor versus a provider of wholesale debt to a MFI in Africa. And as we're coming out of a period now where, in the developed world, the interest rates were close to zero, just give us a bit of insight in the world of an equity investment versus a debt provider within the MFI space.
In some cases, I think a lot of the comments will be preaching to the converted because there's good representation, I'm sure, in the audience that do a bit of both. But what we've seen has been, I guess, kind of good news and bad news. And again, coming back to the point that, yes, Africa, 54 countries, there's a lot of variety. So it's hard to make too many generalizations because the country you know best may be quite different from some of the others. But we found certainly in the CFA franc zone that the good news is there's a surplus of liquidity. So the rates that are being charged there are advantageous for the institutions. Long term, there's an argument whether or not some distortions being created, but the rates are often that we're getting quoted 2, 3, 4%, which is unusually low for the type of risk-return profile you might get, certainly with smaller institutions that we target. The good news is liquidity is there, they're able to grow, and they're healthy, and that's a positive. So longer term, the question will be, will rates go back to where they were before? Because for the moment, the good news for them is they have a surplus of liquidity. It's difficult for us as an outside fund to be competitive at that rate with the risk-return profile. You go to other areas, some places where the central banks have been helpful, such as Zambia and others, creating good liquidity lines for the banks. And that's been very positive, and we've been able to be competitive and still be in that market. And then there's others where the banks were less involved. They had a short moratorium, and things have kind of gone back to, quote, business as normal before COVID. So that is an area where we're able to be more active and to be more competitive, and it works. So from a debt perspective, that works. The one thing that we've seen, and this is a trend over the last 5, 10, 15 years, is with the success of the kind of international funds investing, they've gone overwhelmingly to debt. So you get almost 80, 90% of the funds and or capital available as debt. The amount of equity is kind of a straight line going down the other side. There is not a lot of foreign capital available, and certainly not for small institutions. So from our point of view, there is there's a strong interest. And then our challenge then is to find areas on the risk-return profile where we feel it meets kind of the conditions for stability in a longer-term investment perspective that we feel would make a good use for our funds. So equity, there's definitely a shortage. And debt, it depends, I think, the market and your sources of funding for your pricing in there.
Thank you. Is there anyone else on the panel that want to comment on the wholesale funding costs and what you're experiencing in West Africa, East Africa, from a funding perspective or from the bank's perspective?
In terms of the funding perspective, we see still the microfinance space demands a lot of funding, and taking note that a lot of these microfinance are not mobilizing deposits. They are mostly credit, and there is a lot of demand that is coming up. And our key role actually is to bring in the strategic partners to fill in the gaps. Despite of that, we note a big gap in terms of skills. And one of the interventions that we have put in place is at least to prepare these institutions to get ready for some of the large financing requirements wherever actually they arise. But most important is we find we have double roles, just finding mobilizing the funds, but again try to take them through the skill gaps and get them ready for the project size.
Okay. If I may also come in, at least from the West African perspective, what we'll find there is cost of funding is not low for, especially for the microfinance institution. The operations are high, and what we've decided to do to assist is to find a way to reduce their cost of operating, especially around collection. Now, if you think in terms of COVID, why did COVID affect most of the microfinance banks seriously? Was because their business is more on a one-to-one basis. So they are dealing with many of the women operating in the markets. The markets are shut down. The collecting officers are not able to see them to get their loans back. So encouraging them to go more into using digital facilities to do collections and all of that. And then we're also trying to support them with partial credit guarantees. Think about it. How many microfinance banks in Nigeria are able to get access to any credit guarantee from most of the companies operating? Even when those companies come in, they are targeting the big national MFBs. And like I said, we have over 911. And many of the people operating in those areas that really want to see that impact are also in the economically disadvantaged states. And these are state MFBs and unit MFBs. So what we do from our subsidiary is to also get them onboarded and support them with partial credit guarantee that will then catalyze their lending to those space. All of that, plus the technical assistance itself, environmental and social risk management, and all of that, training around all that, has really assisted them, because we believe that when they're able to do all of this, their cost of operation is then brought down. And then they are then able to afford whatever funding or financing costs they are then getting from. And the fact that we are a local DFI providing finance in AFSIC, in Naira, has assisted them, because most of the other companies that have been coming in have been doing a lot of funding in FX. Think about the exchange rates, rate risk that they also be carrying. So the local currency that we then provide from DBN has assisted them a lot in reducing their cost of funding. And that's why we are looking at getting more funds to help, because we really need to help that sector, right? If we are not able to do that, think about it, over 98% of Nigerian MSMEs are actually micro and small. And they are looking forward to the microfinance institutions and banks to support them in their access to financing. Thank you.
Thank you. Reginald, do you want to comment on that?
I just want to add one point that I read a lot of reports on, from international organizations about Africa, about MFIs, and sometimes I feel like maybe I'm not in Africa, or the reports are not about Africa. Because the description that covers the whole of Africa is not necessarily a representative of each individual MFIs. So I would suggest it's necessary that when one is interested in investing in Africa, to investigate, or rather to look into individual companies or rather individual countries, because sometimes the generalization is actually misleading. The last 10 years I have interacted with a lot of investors, and sometimes because of the ideas, because of understand that they come with a certain model that does not fit the local requirements. So the matching of the two, I think, has been a huge challenge in many ways.
Can you give an example of where there's a lack of link up or matching what the local environment?
Oh, the key, one of the main elements that has been difficult for me actually is the amount. Most investors are coming with a specific amount with certain criteria. They say the equity debt ratio must be that or the other, and most of these MFIs are small, so they cannot really chew the amount that is required by the investors. That would be one example, but there are many others. The kind of system they are using, the interest that's being charged, the leadership that's in place, they want the dilute of the shareholders, because most of these MFIs and SMEs are family-based businesses, and the investors actually like to see that the shareholding structure is diluted.
Thank you. Michael, maybe back to you, from the perspective of overview of performance of the sector. I think we're getting to the real gritty part of this now, but I think it is not an unknown fact that it's been a couple of very difficult years in the MFI space. Obviously, there are different dynamics in the different countries, as we mentioned, but what is your takeaway and what would be the standout? We've had now a mention of the administrative costs, the transition to digitalization during COVID, but what has been the main drivers outside of COVID for difficulties in the market?
Well, that was already a really, really big one to digest for many, many institutions, for sure. Well, other elements, depending on where you're looking at, definitely regulation, where regulation still develops. In the Kenyan market, for instance, new regulation coming to place that affects the players and how to grapple with that. On a broader scale, I see the ESG topic coming to microfinance as well, maybe driven from an investor point of view. In all of that, I see main challenges for management and the board. When times get tricky, then you really, really need to have a good management quality, good corporate governance in dealing with it. And that's where I would see where in the future years you will see more of the which institutions manage to develop and which ones will maybe struggle.
Frederick, from the Tanzanian perspective, where do you see the Tanzanian market going in the current circumstances with the interest rates now rising and inflation rising? How do you see yourself, your own organization as well within your market, how it's going to manage in this environment as we are all not isolated to what's going to happen, and it's increasing to happen with the a flow over of developed market inflation pressures as well as the rising dollar interest rate. How do you see that? I mean, Tony's just mentioned that the interest rates are already high and perceived to be high, but we definitely are going to, the curve is definitely upwards. How do you see those factors influencing the Tanzanian MFI market?
In fact, if you look at what is happening in the market and you look at what you would keep the bankers awake is where the FX rates would go in the next couple of months. And for us, for example, looking at our customer overall requirement in terms of the FX, we get the feeling of a shortage in terms of the supply, but again, it is becoming expensive. So what we are doing is a strategic partnership in terms of attracting more of the funding from the partners to fill in the gaps, because the supply in terms of the normal flow is not really adequate enough to cover the demand in the market. Secondly, we are looking at the customer demands in terms of the FX, try to see how we can mitigate the risks in terms of the pricing and the FX exposures. So most importantly, at time when the customer is coming to take a facility, you might have not that visibility, but we as bankers are having that visibility. We bring in some partners to mitigate in terms of the FX risk and in terms of the interest rate risk. But as you point out, the key intervention is how do we play with the key strategic partners? And actually, if you look at the engagement we have at this point, is to see how can we meet and cover the gap, because if you look in the balance sheet and the demand from the customer, you realize there is that FX, a gap in the balance sheet.
Thank you. Tony, just can you give us some insight within Nigeria? I'll be interested to know if you've got certain development goals per sector, and do you have certain sector goals, i.e., agriculture, female service sector, and how do you drive those development goals within the Nigerian landscape?
Thank you very much. Although we are basically sector agnostic, right? Because we're looking at the MSMEs and the fact that they have a whole lot of challenges. But thinking about development, there are some areas that you know clearly that we need to have a stronger focus on it. And you mentioned some of those sectors. So how do we encourage lending to go to those sectors? Since we're a wholesale finance institution, what we decided to do was to we always tell our participating financial institutions, we are not competing with you. We are collaborating with you. We are partnering with you to ensure that you give finance to even the last man at the end of the chain. And part of what we've done is we've created some framework to incentivize the PFIs, the participating financing institution, to lend to those sectors: gender, green finance, agri, manufacturing, and all of that. And part of it is that we have something like an interest drawback scheme, a rebate scheme, where after you've paid off and all of that, we're able to give you a rebate. That has really worked a lot for us. And we're also looking at, like I said, we try to encourage them with some technical assistance. So the fact that you are doing this and we are then kind of co-developing products with you, we are linking them up with other development partners as well, who are providing grants and some other type of concessions for them, definitely not for us. And that has we've done a lot to encourage the PFIs to go into those lending space. Areas that they never wanted to go to before, but because of the kind of things we've done. We are also trying to go, because we want to be sure that everyone in Nigeria has access to finance. We've developed other framework especially for non-interest banking. Because we have this crop of MSMEs operating in some part, especially in the northern part of the country, where they don't believe in paying interest, right? We have to deal with them. So we've come up with a non-interest banking framework, which is going to assist them in servicing them in those areas as well. All of that, coupled with the fact that once we are dealing with the development partners and we are sharing with them our vision and what we want to achieve, it assists us to get some form of, even if it is grant, if it's some training, that we then pass on the benefit that we are receiving directly to the PFIs. And that has also gone down to the end borrowers as well. That has really been helpful in driving financing to those segments where we believe we are going to make the greatest impact. Thank you.
Thank you. Melina, just I would like to hear your views about the future of the industry. And with that, it's one of my thoughts in preparation for this was, when I built our lending business and you really start looking at loan book systems and all the other software that's available in the market, it's literally a plethora of, there are literally thousands of software packages out there. And is there not an opportunity for the investors involved within the African market to provide a type of white labeled loan book, impact scoring, KYC type of models that is quite generic across the market? Or is it impossible to get something like that, across the different countries? You don't have to focus on that question, but I think for me, the different loan book systems, I remember it's one of the biggest areas of due diligence as well, eventually, and sometimes this can be simplified. But what is your views around the future of the MFI sector in Africa?
Yeah, I think when COVID happens last year and the previous year, I think we were wondering what was going to happen in Africa. And I think today what we see is that the MFI sector, in particular in Africa, was extremely resilient compared to Latam and Asia, as we have investment on those geographies as well.
Sorry, Melina, can you also comment what is the differences that you experience maybe between Latam, Africa, Southeast Asia?
I think there are many. It's basically the stage of digitalization. I think in Africa we're well advanced, comparing perhaps to Latam, not necessarily with Asia. I think the regulation also plays a strong role because some countries, where the regulator was more supportive and active to support financial institutions to deal with the pandemics. Innovation, of course, was a main differentiator. I think also the investors being hands-on and really helping institutions in terms of improving solvency as well. Um, okay.
Don't worry.
Uh,
Another 10 minutes, 5 minutes.
and okay, let's continue. Then, in terms of what is next, maybe to answer your question, we have asked this question to ourselves, where we see the growth and investment opportunities. I think when it comes to growth, I would say that for MFIs, it's really important to transition from crisis management. I mean, we have been so many years, I say, under crisis to develop a more long-term perspective for growth. I think this is really important, and I think in order to do so, MFIs should be able to review the business model and to make this flexible and adaptable to future crises, because unfortunately that will continue happening. And in terms of opportunities, it's quite difficult.
I think we may have a fire. Can you confirm if there's an official fire alarm?
Okay.
It's not an indication of the state of the MFI sector in Africa. Yeah. Sorry, Malene.
Yes, sorry. But in terms of opportunities, I think it's important for MFIs to really understand the needs of their clients. And what is challenging here is that those are really changing over time. So I think innovation could be a good answer to be able to respond to these needs from the clients. And I get back to the digitalization, because I think that digitalization accelerates innovation. So we see a lot of opportunities on that end.
Michael, do you or Robert want to comment on that? I mean, part of what we see is that certain MFIs or in certain countries there will be better support from government. There will be more digitization options available versus others. How do you see this develop? But just a general comment on Malena's remarks.
Yeah, I would say that when it comes to digitalization in this day and age, especially in the African context, there are differences, but still, African MFIs have been on the forefront and exporting a lot of knowledge to the rest of the world. A number of Eastern European colleagues asked me, so what do they do that we can use? So that's this day and age then for an institution not to utilize this, not to ensure that there's cashless lending operations, that they're not utilizing operational efficiency gains from technology is, I think, is no longer acceptable. At the same time, from the impact investors, I think it's the balance. What was remarkable with COVID for me was to see how quickly impact investors reacted and provided support, and did that in a very pragmatic way. But when it comes to then taking the next step, how much time and energy does an MFI have to invest for reporting and different reporting? So 80%, 90% is the same, but the 10, 20% on top of it that are not coordinated create quite a bit of a challenge. But also, if you're then digitally ready, if your reporting systems are good, then you are able to provide reasonable, reliable reporting, which does a lot of good when it comes to investor communication and really showing a convincing case.
Robert, do you want to comment?
I guess quickly, just a few comments to say. I mean, I think what COVID did was put an emphasis on the need for solid technology systems in the institutions, and whether those that technology system for reporting or for new product development is for the future. But I think it made the importance of being able to support and to respond to types of shocks and for periods that weren't traditional for what some of the IT systems were there. In terms of digitization and what the future is there, what we saw was during COVID, a lot of the institutions made much more use of the mobile banking and some of the kind of, I guess, older generation kind of new technologies for it. But since COVID, we found the numbers have fallen right back to where they were pre-COVID. So they're around 20-25%. So even the clients have made a decision to use less of that channel for communication. So I think then the emphasis is there, I think, both from the client side and from the investor and the institution side to say, okay, the technology is getting more and more ready for application and introduction. So I think there will be a stronger concerted push to make better use of it. But then again, it's going to be the type of the institution, because more informal ones might have other priorities before they go to digital. So I think there will be a push towards it, but I don't think it will be maybe as optimistic as Melina was saying, that it's going to be a big part of the future. It's going to depend the country and the type of, and the size and the development stage of the institution as well in that.
Thank you. Reginald, does AML have foreign investors in your capital structure, in your balance sheet that you're reporting development criteria to?
No, not now.
No.
Not now. So they're looking for one.
So it's only your own, is it your own development goals that you are driving, from a balance sheet perspective?
We have a few local loans, but it's not really enough. We are looking for more to grow the business. The growth that we have gone through the last 10 years, about 20 times, and now we feel we have the strength to chew more funding in terms of doubling the portfolio and all that.
And do you feel you get enough support from African development finance institutions in building your business?
No, not really.
So what do you think can change from that perspective, without in making friends and influencing people point of view? What do you think can change from that perspective, as you are growing so fast? Obviously, your performance is there in a business that's growing. What will help you from an African DFI perspective to grow the business?
I think it's a two-way traffic. One is we are learning what the investors are trying to look for, and we have quite adjusted the business model in many ways. And we are sure there's an investor somewhere looking for us, only that we have identified him or her. And we also are able to understand the language that the investors are trying to speak, so that we speak the same language. But in terms of understanding, I think we have grown from somewhere to where we are today, and I'm confident that the next few years we'll just be able to get the funding that we are looking for.
Thank you. We're in the last 5 minutes, and I want to give the opportunity to some of you in the audience to ask the last couple of questions. Are there any questions for the panelists? Maybe if you put up your hand, maybe you can direct your question to one of the panelists. Do we have any questions?
Yeah. Hello, my name is Olivier. I'm a tech provider and financial services provider, like B2B in terms of technology. My question goes to Melina, which is actually I think was not unanswered. You raised the question to know if there is any opportunity or the future of the technology sector, and we'll give an example of a kind of white labeled solution that could work across Africa. I'd like to hear from Melina, from his experience, if she thinks it's something doable. But from my perspective, as someone who provides tech switch solutions in 8 countries, it's not an easy job because of difference in regulations across the countries in Africa, and also language barriers and all the kinds of things make that it's not necessarily an easy project. But it can be making sense. If it's possible, I'm happy to hear from Melina. Thank you.
So if I
rephrase the question,
if I can rephrase it, is there scope for you can say African developed software that supports the MFI sector, in which there can be support for the considerations from in an African marketplace, adopting, you can say, a best practice, or if is there as you would say, more a Toyota than a Rolls-Royce that works in Africa from a software client onboarding, management and reporting perspective, for which there's opportunity also from the software sector in Africa to bring that standardization or white label product.
Thanks for clarifying the question, and thanks for the question. I'm not a tech expert. I think what we have seen in portfolio is that there are tools that works better, that for sure. But I think there is not one solution that fits all needs, for sure. And the complexity of the African market, I think it's quite relevant. And when it comes to find the right solution. So maybe very, very short on that, I would say that, yeah, as a DFI, we have seen really, we work with the technical assistance and we see certain solutions that really works better in certain investments, in certain microfinance institutions. But again, I wouldn't say that this is something that could be standardized.
Is there anybody else that want to comment on that? Because I think also in the, is there not also software and opportunity solutions available from other markets like Asia? That's one of the thoughts I had. But I know that we are literally, that's the last speaking opportunity, so you're welcome to go ahead, Frederick.
Quick one. What we see, what we see in the market, in the African market, particularly the place I'm coming from, we see a lot of attraction on internal developers and the customization of the solution. In some cases, but in some cases we see where the off-shelf solutions are being taken. But you look at the East African Bank, look at Equity, the number of developers they have deployed to customize the solutions and accelerate the digital in the market needs. Look at CRDB, for example, the number of developers. So if you look at the market around Africa, the demand of developers to customize and try to accelerate the digital adoption is a trend, and it looks like they are more required. Even if they take the off-shelf, they need customization to the local environment.
Yeah, thank you very much. I mean, my closing comments on that is they are obviously integrated CRM loan book system. I think where the challenges in this industry is on the reporting side for ESG, data gathering on that, where you are focused on repayments and growing your book. To also deal with the ESG questionnaires is a nightmare in itself to management. But to your question, I also think there is a market that's going to develop for software developers in country. Just one of the small things are, for instance, addresses in Africa. Addresses and the way that it's address books work in different countries in Africa is a major challenge that requires its own local software engineers to solve the problem. Look, I'm as hungry as can be at this stage, so I'm not going to go a minute further. I want to thank all the panelists. Thank you for your contribution, and I still believe that although it's been a challenging couple of years, it's the most needed sector, supporting grassroots businesses developing in Africa. So thank you very much for your efforts in that industry as well. Thank you very much.